take a moment here and welcome you to YouTube Live, the webinar, a discussion on all of the volatility that we're seeing in the marketplace. And I have some very specific suggestions and advice on how we can all not only survive, but actually thrive through all of this market dislocation. And I want to start off by just putting in a little bit of context, but I'm going to give it a minute or two because I think people are joining quickly. Somehow I want to also get my chat screen up. So if you're on YouTube, welcome, welcome, welcome. If you're on the webinar, welcome. So glad to have you here. And I want to just start by saying these are unprecedented times. We have not seen this kind of activity before, although we've seen very many different episodes in history that are remarkably similar in a lot of ways, and yet this is dissimilar. And so what to do about it and how to think about it. And I know as hosts, we've all seen a lot of inquiries and also some cancellations. I haven't seen very many cancellations, but I've seen a couple. I also run a small boutique hotel in Costa Rica, and I believe we've received 2 cancellation requests. And so I'm going to share with you some of those thoughts. Let's see, I want to just get my chat. How do I get the chat? Okay, here we go. Cool. So give me 1 second here and we will get started. All right, so we have people from like Lisbon, Portugal, Minnesota, amazing, Gatlinburg, Florida, Alaska, so cool. And if you guys could just, I don't know, give some likes to the video, please. We would really appreciate some likes to this video so that we know everybody is tuned in and paying attention, and that'll actually act as an invitation to other people to come and join us. So here we go, we got the boogie down. Cindy from the Bronx, Atlanta, Wilmington. All right, cool. Finger Lakes, I love it. You guys are the best. Portland, Oregon, New Zealand, Virginia, Cannes, France, Costa Rica, Scottsdale, Frankfurt. Wow, you guys are insanely cool. I love it. All right, here are the things that I want to just start off with. Let's start with the coronavirus. And again, I apologize that the last time I did the live, the audio and the video were choppy. We're now in a industrial commercial strength co-working place, so that eliminates that. And I'm also recording it, so if you miss something, we're going to have the audio and we can share that with you at a later date. But here's the thing about the coronavirus. We've seen many instances of similar viruses that spread, and each one of them is really scary, but they seem to be more localized, right? So whether it was the SARS epidemic or the avian flu or the bovine flu or foot and mouth disease, they were hyper constricted in a certain geography. And so if you were in that geography, it was really scary. But the coronavirus to me seems to be creating a lot more concern and uncertainty, and the media is fueling it. And part of that media fueling, even though I think it's way overdone, is actually quite beneficial. And the reason it's beneficial is because it's scaring people. And when people get scared, they don't move and they don't travel and they don't do any of the things that they would normally do, which might spread the disease. So in some perverse way, all of the fear and panic is actually a good thing. And if you just start to think about the reality of what's going on here with a different mindset, a different set of lenses, we can always find good in all of this stuff. And so I understand that it's really scary. In fact, I've been a little bit under the weather, which is really rare for me. And the lovely Ms. Bossy, who's over there, she thinks I have the coronavirus and I do not. I just have a little cough. But life goes on. You just have to be smart. Make sure that you're washing your hands and you're using Purell, which is really hard to find. We've gone to like 10 different Targets and grocery stores and we can't get any of it. So do your absolute best to do all of that. We're now elbow instead of handshakes. Eric and I are out here looking for real estate. And so all the people that we're meeting with, we don't shake hands anymore. We just elbow bump and we get creative and we joke and we laugh. And I encourage you to do all of that. But life must go on and it will go on. And while the coronavirus is really scary, just recognize that it has a short lifespan, and through the social distancing, it will eventually go away, especially as we approach spring and warmer weather. There's a lot of scientific, anecdotal, not yet proven evidence that the coronavirus doesn't do as well in warm climates and in humid climates. So as we move into spring, and that's why flu season tends to be in the winter months, and then as we go into spring and summer, you don't really get the flu. So the good news is this is a finite period of time. It has a short lifespan. I anticipate that the headlines will get much worse, much scarier. Many more numbers, many more cases reported. There's a severe number of underreported because testing is still really hard to achieve. Results take a long time. And so people are out there doing all sorts of things, unknowingly spreading the disease. So just prepare yourself. The headlines are going to get worse. So once we're safe and once we've changed our behavior and we're doing the social distancing and we're handshaking with our elbows and so on and so forth, over time, gradually, this will be gone. And then in the future, there'll be a vaccine. And when you go get your flu shot next year, it'll have, the strain of the coronavirus and so on, like all of the other flu shots. So that's kind of my thoughts on the coronavirus. I think it's awful for the people that are losing friends, family, loved ones, and are suffering and so on. I don't want to minimize any of the human casualty, but I do want everybody to just recognize that it's actually not that much worse than a normal flu. And if you take a look at the numbers, there's far fewer cases of infection and far fewer fatalities than an ordinary flu that happens every single year and has happened for decades, centuries, since the start of time. And this is no different. What is different is the fact that it's, worldwide, and the fact that the media has really glommed onto it and is in some perverse way helping us through social distancing, and people are canceling and so on. And what that's led to is the second part of this live event, which is what is going on in the stock market, what is going on in the treasury market, what is going on in gold and Bitcoin, and every single asset class in the world is selling off massively. And the question is like, well, why? And the answer is, one, fear. There was a ton of perfection priced into every single asset class. And I've made video on top of video discussing how we need to be really careful and how things are priced to perfection. And now's not the time to get really, aggressive. And it's time to maybe scale back and bring leverage down and reduce exposure. I've filmed videos saying if you have a non-performing short-term rental property, now's a good time to sell. Maybe sell and then sit on the sidelines and or find another location. So I've been sort of like banging the bell about the risks that I saw. I've been teaching about risk, and I feel really great about that because it's actually helped a lot of you. I've received an incredible amount of support via email and messenger and so on, saying, I did this action and this action and this action, and I actually did everything that you said to do, and now I feel great about it because I've got a cash reserve and I can take advantage of the opportunities. And so I just want to caution everybody that while talk is cheap, it's really important that you know who you're listening to and what their qualifications are and what experience they have. And I'm not saying that I'm the best or the smartest or anything like that, but I am saying that I have a lot of experience managing through difficult periods of time with massive dislocations, massive uncertainty, and have always survived and have actually always come out the other side even better. So if you don't know who you're listening to, ask them, what did you do in 1987? What happened in 2002? Tell me about the 2008 crisis. Tell me about December of 2018. How did you manage your portfolio through all those periods of time? And if they have really good answers, then listen to them. If they have no idea what you're talking about, then that should be a question mark for you, like, huh. And what I would say is the people that are really pushing the leverage at the maximum through rental arbitrage, that's where the pain is going to be felt the most. I mean, of course, if you have one rental arbitrage, it's no different than owning a home. But if you've gone out and you have 10, 100, 1,000 leases that you must pay every single month, and your revenue gets shut down to zero, unless you have like 6 months of reserves to make sure that you can pay every single utility and every single lease payment, you may have a big problem on your hands. And there are people that are doing that right now. Some of the bigger companies have announced massive layoffs. Hundreds of people are being laid off in rental arbitrage specifically, because what's happened is travel has come to a stop. I think it was my number 4 prediction in a video that I filmed in January, saying that I thought Airbnb may not go public. That's proven correct. Another one I made in that same video said that I thought rental arbitrageur companies will be going out of business or consolidating. They'd be takeovers. That's happening right now. So these 5 like outlandish predictions that I made 4-6 weeks ago, I think 2 or 3 have already come true. And I bet the 4th or 5th will also. So I just want to share with you that now is not the time to be aggressive. It's really great that the stock market rallied hard today into the close on the announcement of Donald Trump and the Democrats and the Republicans coming together for a fiscal stimulus package. But that does not mean that the worst is behind us. If you take a look at history, and this is why having history is really important, after the crash in October of 2008, we had a rally like today. Today was the single biggest rally since October of 2008 in the stock market. And so people got really, excited. The worst is behind us. It's time to buy the dip, and I'm going to buy aggressively. And what history has shown us is these are better times to be selling these rallies versus buying. So I don't want anybody to go out there and listen to what I said and get really aggressive and excited. What I do encourage you to do is dollar cost average. You should be buying at these levels. If you like the stock market 25, 30% higher, you should love it today. But the way that I want you to love it is in dollar cost averaging. So let's just use a real example. If you have a $10,000 cash reserve that you want to invest for the long term, not a day trade, I want you to think about investing just like I've urged you to do with all your short-term rentals. Everything that I do is about long-term wealth, right? So today is a great time to add to your stock investments if you've got a long-term investment horizon. But rather than try and call the bottom, the way I'm going to ask you to think about this is to dollar cost average. Take that $10,000, pick a time frame, let's just use weekly or monthly, and then buy $1,000 every week or every month for the next 10 weeks or the next 10 months. And if you do that, you will not only get into the market, which is the most important thing, but you might get filled at lower levels or higher levels, but it'll average out and you'll have the exposure that you want without taking a massive risk. And I want you to ignore the daily price volatility because there will be massive amounts of volatility still. After October of 2008, the stock market did not bottom, even with these false rallies, until March 9th of 2009. I actually bought stock on March 9th of 2009. I bought the low. And the reason I bought the low is because it was so incredibly painful, scary, frightening. The people in and around the investment opportunity that the hedge fund world, what we were talking about, and it sounds kind of crazy, but this is literally the way we felt, was buy gold and then buy guns. That was our investment thesis. We needed gold because it was the only true reserve, and then we needed guns to protect our gold. So things can get really crazy really quickly, as we saw. This is the fastest drawdown we've seen. We had 16, 17 days. We eroded so much billions, maybe even trillions of dollars of wealth in a heartbeat. And the reason that happened actually was the fear and panic of coronavirus triggered a stock market cold, and then everything else also, the treasuries and things that would normally retain asset value, like gold is a store of value. Bitcoin, in theory, is a store of value. But what happened was there was so much fear and panic and crisis mode that everybody needed liquidity. And so everything was being thrown out. In fact, one of the most safe conservative investments you can make in the stock market tends to be utilities, like electric companies, water companies, things that we rely on. They're not very sexy. They're not very glamorous. You don't get rich buying them, but they're considered really safe. So these ultra safe utility stocks are down almost 17, 18% because everything was being shed. Gold is down. Gold should normally be up. The only thing that mattered was people raising cash to continue to fund their lifestyle. I need to eat. I need to pay my mortgage. I need to do this and that. Now, after the close, the Trump administration, in coordination with the Democrats, have come together and they're announcing a stimulus package. I don't know if it's been released yet. If it has, I certainly haven't looked at it. And depending on what that says, that could be strong enough to try and put in a bottom. Again, I think if I had to be a betting man, and I'm not a betting man, I think that Trump in an election year with Democratic support will throw so much incredible fiscal stimulus at this thing to boost the stock market, to boost his ratings, to boost the likelihood that he gets reelected. So this fiscal stimulus package, now that there's a national state of emergency, might be so strong that this in fact is the bottom. But if it's not that strong, then I do think we'll continue to see volatility. I think this will be a false rally. I think you should be dollar cost averaging in, and I think you should be prudent in your exposure. One of the things that I take a look at, and if any of you are traders, is the volatility index. It's called the VIX, V-I-X, and we reached near all-time levels ever. We've been trading in like the 68, 70 plus range, and during all stock market crashes, I think the all-time high is 80. So there's fear, there's panic, there's blood in the streets. People aren't sure what to do or how to behave or how to react, and people are just throwing the baby out with the bathwater. And generally speaking, if you can remain calm and rational and sane, you can actually do really well through these periods. In fact, when I was a professional hedge fund manager and I ran a $4 billion with a B, $4 billion portfolio, we kind of looked forward to these opportunities because it allowed us to take advantage of these things and generate some alpha. When everybody else was selling, which is beta, we would be buying. And so then our outsized returns would be alpha, which is really hard to generate. And that's what we would do. So I just want to share with everybody, whatever's happening to your 401k, whatever's happening to your 529 plan, whatever's happening to your stock portfolio, your bonds, etc., like ignore it. You don't need the money tomorrow. So therefore, don't worry about it. And the really nice thing about this crisis that we're having right now, unlike 2008, for instance, is that this has a finite life. And the reason that this has a finite life is that the coronavirus will pass, it'll flame out, there will be a vaccination, social distancing will work. That's why countries like Singapore and South Korea that reacted intelligently and properly. Oh, and you know why they behaved intelligently and properly? Because they lived through the SARS crisis. So they learned what to do in the SARS crisis. And Singapore and South Korea have had like less than 200 cases, and life goes on, and they know exactly how to do the social distancing. They know how to do the testing because they did it through SARS. So the countries that are having the epidemics right now in the pandemic really haven't had exposure to it. If you recall from the top of the show, I said that it was more hyper localized, and now this is the first one that's global. So countries like America, France, Italy, this is new to us, and we're learning on the fly, and it's unfortunate. There's a lot of people that could have been spared, both in terms of pain and suffering and some fatalities, but guess what? This won't happen again. There'll be another pandemic, there'll be another virus, there'll be something else that happens, and I wanted to encourage you to learn as much as you can during this one so you know how to behave during the next one. So that's a little bit about the coronavirus and the fact that it's a temporary, fleeting thing, but expect the headlines to get worse, much worse, massively worse. And when we have a bottom in the stock market is when the bad headlines don't matter. Right now, it's all fear. So like a little headline's like, ow, and then we just plummet. But soon, and I don't know when, it could be right now due to the fiscal policy, it could be in a week, it could be in a month, it could be in 3 months, but soon there's going to be an opportunity to say, not only has this passed, but the economy remains strong. And I think the good news from host perspective, travel, hospitality, leisure, business travel, there's this concept that I want to share with you, which is called pent-up demand. So there's a hypothesis, and I don't know if I'm right, but I'll share it with all of you, that all of these trips that are being canceled right now, all of these guests that are canceling on your short-term rental right now, aren't canceling permanently. They're canceling temporarily. And as soon as the world normalizes, there's going to be so much pent-up demand that there's a very strong possibility that you're going to experience the best occupancy numbers you've ever had in your entire hosting career, and also the best average daily rate you've ever experienced, because there's so much demand and there's no more supply, right? Like, we're not building single family homes. We're not bringing more Airbnbs on. In fact, there's probably Airbnbs shuttering by the hundreds and thousands, and the people that are shuttering them the fastest are the most levered, and those are the Airbnb rental arbitrageurs that have been making millions and millions of dollars, and watch how quickly they lose them. So as all of this supply goes down and there's a lot of pent-up demand, low supply, high demand, prices go up. So there's a very strong possibility, if you can survive through this period and you didn't lever yourself too much and you know how to manage through this, and you've got reserves and you can pay your mortgage and so on, that some of the best days are ahead of us. And I just want to share that all with you because that's truly how I feel about it. I think there's going to be incredible amounts of demand in the third quarter, could be the second quarter. And I also want to share with you something else that isn't lost on me, but might be lost on you. The vast majority of hosts on this channel, and I don't know how many people are on, maybe Hardik can give me a 300. Okay, 300 people. Yes. The vast majority of hosts that are on this channel and paying close attention to this, we tend to have the same seasonal spikes. So most people have spikes during what's the US summer period, and then the secondary market tends to be winter. What's really amazing to me is we're at the very tail end of spring right now. So we're going into like a very slow season, a shoulder season going into, say, April and May. So if we're going to have vacancy, I'd love to have it when my rates are really low. And then if we're going to have a spike in pent up demand, I'd love for that to happen during my high season anyway. So if I'm selling something at $200 a night, normally in the past summers, and now all of a sudden there's less supply because the rental arbitrageurs are out of business and there's more demand, you might get $250 a night, $300 a night, $350 a night. So the timing is just absolutely perfect if you're strong enough to like make it through to the other side. And all of my teachings and everything I've ever said and every course I've ever filmed and every live event I've ever made, and I'm really happy that this is the case, I've always said about being conservative and to live for another day and to not get rich quickly, but instead get rich with certainty. And that is true today too. So I'm going to pause here for a second. Actually, before I do that, I'm going to share with you, I've had 2 cancellation requests in my Airbnbs, both in Jackson Hole, both for this week. And I just got a request right before we went live for one of my other properties. So I've had very little in the way of cancellation requests. That tends to be because my short-term rentals are in more like vacation spots and destination spots. That's consistent with my why. So I have no urban locations. The urban locations are getting hit much harder. And the reason they're getting hit much harder is because there's much more concentration and density. So like the last place that I want to be during a pandemic is like New York City riding the subway, right? But would I be down in say like Nosara on the beach? Yeah. And then the other thing that I would say about that is the following. The urban centers tend to be really specific around events. So if you're in Austin, Texas, South by Southwest, that's when your peak seasonality is, and that's when you charge the most money. And when South by Southwest gets canceled, unfortunately, the hosts in that area, that's a problem. So I think that the reality of it is vacation locations are still being affected, but less so than the urban areas. And that's why I encourage everybody to have diversification. If I had urban investments, I would have them spread in a variety of cities so that I'm not dependent solely on, say, like South by Southwest or Coachella or any of these other big events that get canceled. I would have a handful of urban areas, and I'd also sprinkle in some vacation luxury destinations so that I'm not even beholden to urban areas either. So you've heard me teach time and time again about diversification and remote hosting and why it's so important. The most recent video I filmed on risk, I said the thing about risk that you don't know is the unforeseen, right? Like we don't know, that's what makes it risky. But too often we get complacent, we think things are working really well, we start to lever up, we add more units online, we start to think what worked in the past is going to continue, so I'm going to keep doing it the same way. And that's just not true. So again, I said this earlier, if you're joining us a little bit late, it's really critically important that you're getting advice from the people that have lived through these sort of situations in the past, that are intelligent, knowledgeable, forward-looking, and are credible. So there's a lot of people I get served up dozens of Instagram ads and Facebook ads about, I got rich doing this and I don't even have any property and I do this and I like, yeah, but you're also like 22 years old and you have no real world experience. And how are you feeling like right now? So just be really cognizant. And I'm not saying you have to listen to me, right? Like, don't listen to me. It doesn't affect me in the least. But whoever you do listen to, just make sure that you're listening to the right people, okay? Because you could be led astray, and that is a bad situation. All right, so I think I'm gonna pause right here. It looks like we have a lot of questions, do we?
We do.
Okay, you wanna read some? Guys, I'm gonna try and turn this around. Say hello to the lovely Erica. There she is.
Hi, everybody.
Okay, sorry. Okay, go ahead.
Let's see here. So Thank you for taking time and sharing with us. It would be interesting to hear your thoughts on how long this will last. Also, what you did with STRs, if you've made any changes or adjustments.
Okay, so how long do I think this will last? And I think that there's two different questions there. I think that the coronavirus fear and epidemic is going to get much worse. The pandemic is going to get much worse before it gets better. That said, we can look to China and we can already see that the number of cases have started to level off as the virus sort of cycles through its normal life, and then we have social distancing, and that's going to work everywhere. So I don't know if it's measured in weeks or a month or two, but I would be really surprised if it was with us, beyond say 3 months. So the coronavirus, I think, will tail off rather quickly, but I just need to reinforce this to give you that safety and that comfort. You're going to read far scarier headlines. It's going to happen. Expect it. You're going to know somebody who has coronavirus. You yourself may have coronavirus, and it's okay, right? Like, you had the flu, and unless you're ill or infirm or elderly or prone to this, you're going to be just fine. I'm not going to minimize it. It's going to suck, but you'll be fine. But the headlines are meant to get attention and to sell newspapers and to sell ads, and they're going to be reporting facts, and the facts are it's going to get worse before it gets better. So once you know that, then you can start to be immune to the headline and the fear, and you can continue to live your life and be fine. So that's how long I think the coronavirus pandemic will last: a couple of weeks to a couple of months, no more. And then the stock market volatility and sort of the sell-off and the liquidity crisis and the deleveraging, I think that could cycle through over the course of the next 3 or 4 months, bringing us to about Q3 and Q4. And my personal belief is that we are currently in a recession, but we don't have the data yet to support it and substantiate it. Recession data is backward looking. So, I like to look forward. I'm saying that we're in a recession right now. The amount of dollars that have been lost for, all sorts of small businesses, airlines, cruises, Coachella cancel, Austin. I mean, there's just so many things that have happened. It's like a global stop. And I don't see how we're not in a recession currently, but I think it's going to be a technical recession. And what I mean by that is it might be one of the shortest lived recessions that we've ever had on history. It could be just a quarter or two as opposed to a year or two. And that goes back to the point that I was making earlier about the pent up demand. There's so much demand sitting on the sidelines to resume spending because, again, this is just out of nowhere. It came out of nowhere, the coronavirus, that is. That I think as soon as the coronavirus fears abate and people start moving around and spending money, everyone's going to want to go on vacation. Everyone's going to want to revisit what's going on. So I think we are in a recession today, although the data has yet to report that. And I think it'll be a very short technical recession, I think measured in 1 to 2 quarters as opposed to 1 to 2 years. And then I think we're going to have massive economic growth substantiated by the fact that this fiscal policy that the Democrats and Republicans have announced, and I've yet to read it. I don't even know if it's released yet, but I think there's going to be so much dry powder being thrown, fiscal stimulus, monetary stimulus, because Trump wants to be reelected. He now has a national emergency that gives him all sorts of rights and money, access to money that he didn't have before, and he's going to use it. He wants to be reelected. So I think we will have the shortest recession perhaps in history, and then we're going to have massive economic growth, which is another reason you want to be dollar cost averaging your exposure into some riskier assets like stocks at these levels. As far as what I've done on my very few cancellations in short-term rentals and also at the Living Hotel is I'm asking the guests to just use that as a credit and rebook on a forward basis. And so far that's worked really well because, again, people do want to come. They do want to travel. It's not like they're never going to travel again. It's just that I can't travel tomorrow. In fact, Erica and I are going down to Nosara, Costa Rica tomorrow. And Erica was asking if perhaps we shouldn't delay it by a couple of days or a week or two or so on. I don't live my life in fear. And there's no place I'd rather be than Nosara during a time like this. So we're not delaying, but I understand why others might delay. But it's a delay. It's not a permanent cancel.
Hey, Richard, I just listed my first ever property a little over a week ago. What do you recommend for a new host during this time?
So do we have a name? Who was that?
Let's see, we do. It's Brandon Durkee.
Brandon. So Brandon just listed his first short-term rental during this period of time. And the advice that I'm going to give Brandon is the same advice I'm going to give to all hosts. Now is a time to really not worry about maximum occupancy or maximum average daily rates. Now is a time where you just want to have some occupancy at whatever price, and people are still going around. One of our viewers, CL, I got an email from her. CL, what's up? She sent around, she's been building an email list, which I've taught. You want to be building an email list. You want to have a brand. She sent an email around. I guess I'm on her email list, but there are people who are literally stuck here in America and can't travel home or wherever they're going. And so like are people that need lodging. Eric and I have been in 2 different hotels because the Wi-Fi wasn't very strong. So we were in 2 different hotels. We're going to go to our own hotel in Costa Rica, and we're staying at another hotel down there. So like people are traveling, but now's the time to be conservative in your pricing, bring your pricing down. Everyone else is bringing their pricing down. So you have to be on top of sort of supply and demand. I'm a big believer in dynamic pricing. Dynamic pricing would automatically be adjusting your rates down, but stay on top of it because some money is better than no money. Our costs are fixed. Whatever your mortgage is, that doesn't change. Whatever your lease payment is, that doesn't change. Your cable bill doesn't change. Your utilities don't really change. So if you need the income, and I'm really, respectful of the fact that there are many people on this channel and in this space that are doing this for income, take what you can get. Take what you can get. Don't worry about what the prices were a year ago. That's not the way anybody's thinking of this. You want to invite people to come into your home and stay with you. So if normally you get $100 a night, there's no shame in taking 50 right now. That's half off. Like, so what? But $50 with some occupancy will help you pay some of your bills and help you get through to that other side. And then you can harvest like the fruits of your labor and actually charge higher prices than perhaps ever, say this summer, if everything that I just forecast happens according to schedule. Next question.
Can I ask one?
Yeah, Erica has a question.
So on that note, do you think there's a benefit to speaking to your team members, your housekeepers, your maybe property managers, things like that, and saying, hey, right now at this time, can we work with coming up with an hourly rate, or seeing if they're willing to kind of work with you, being you're not making the fullest, amount that you typically.
I'm going to actually do something a little bit different. Erica's discussing something that's really important here, which is communication with your team, your cleaning team, whoever you have working with you in your short-term rental. And I think it's really important, right now, the world needs leadership, right? They don't need fear. They don't need panic. They need stability. They need comfort. They need safety. I'm on this live. This is the 3rd one I've done. I'm in the Facebook group. I'm not panicked. Not to say that I'm immune from all of this, but like I have a certain comfort level with all of this, and I want to share with you my knowledge, my experience, my historic performance during these periods of dislocation to give you some stability, to give you some comfort, to give you some like safety net. And you too should be communicating to your cleaning teams and other people that work with you as a leader, right? Like now's the time that the world needs leadership. You as an entrepreneur, you as a host, you are a leader. So just breathe, calm down, and communicate with your team to make sure that they're comfortable. The people that work for us that are making hourly wages, they're the ones that are affected the most, right? Like they might be living paycheck to paycheck, and some of us are too. I totally get that. But at the same time, it's time to be a leader. It's time to be calm. And I'm just looking at my screen here, which is hard for me to do and also be on live, but somebody here wrote that no stimulus is going to cure Corona, and that's correct. Stimulus is not intended to cure Corona. Stimulus is intended to stabilize the stock market so that people's savings and 401ks and retirement plans aren't completely wiped out and obliterated for no reason at all, right? Like the coronavirus is a point in time. There's a global shutdown. As soon as that global shutdown, stops, we're off to the races again. So this could be the shortest recession. And I just want to be really clear. I'm not at all suggesting that stimulus will solve Corona. What's going to solve Corona is social distancing and a vaccine, period.
How do you see travelers ranking accommodation options? Obviously, no cruising, no European vacations. People have to change the way they usually travel, so increase domestic demand. How do you see below sectors will fare? Hotels that are large, hotels that are smaller, STR country, caravanning, RV, camping in the wilderness.
Okay. So the question is, will there be some social change in the way that we now travel for leisure as a result of this. And I think that there will be. And I think that these are some of the same trends that we've seen. The reason that Airbnb and short-term rentals are so popular with with guests, is because our preferences have changed. And what I mean by that is we want to have more experiences. We want to live like a local. That's the Airbnb tagline. We want to be like in a different relationship with our environment versus being in a big, let's say 1,000-room hotel. Not to say that there's anything wrong with the 1,000-room hotel, but I think that the fact that Airbnb is now 12 short-term rentals are 12% of lodging nights around the world is massive. In 10 years since Airbnb started to command 12% market share, it's not the prices. And I don't know about you guys, but my short-term rentals in many cases are more expensive than hotels. So like, I don't discount that people that are staying with me aren't staying with me because it's a budget option. It's a preference. And I think we're going to start to see more and more preference as there are more and more, pandemics and viruses and flus. I would much rather stay in a 2 or 4 bedroom house than a 400-room hotel and getting in elevators, pushing buttons that everyone else is pushing. I'm not living from fear. It's my preference to live more like a local. But I think that there are some people that will say, you know what, like that's kind of risky. I don't need to take that unwarranted risk. I'd rather live in a smaller place and do things like this. Whoever wrote that question was suggesting, will people start to vacation more in RVs and camping and staying in smaller homes? And yes, I think over time that's already happening. And these pandemics will actually push people to do that more and reconsider some of these larger hotels. So I think things like the cruise industry is hurting. I don't see that really coming back anytime soon. That's an industry that might have to be on like permanent stimulus, because it's like a floating germ box, right? Like, and that always is the case, no matter how much they clean and sanitize. But how many times have we heard of people getting sick on cruises? And it's just, like for me, I'm not a big cruise person ever. Anyway, I went on one cruise in my entire life down in the Galapagos Islands. It's the only way you can reach some of the natural beauty. But I went on a really small one, and it was one of the best experiences of my life, and I highly recommend that. But I think that the whole massive floating cruise ship industry is going to have some real challenges ahead for quarters, maybe even years.
Would you talk about investing in Bitcoin, Richard? Bitcoin. You have mentioned before that one investor, depending on one's level of risk, should have 1% of their portfolio in Bitcoin. When I mentioned this to my portfolio manager, he said that they don't invest in Bitcoin and I would have to do it myself.
Okay. So the question is about Bitcoin, and I have to tell you, I cannot believe the moves that I've seen in Bitcoin. It's hard for me to fathom. I mean, it's down almost 60 or 70%. It's back to, call it 2017 levels. Last I checked before I went live, it was trading around 5,000 per Bitcoin, which for me and my risk tolerance is something that I would be buying as much of as I could. But for people that don't have an exposure to Bitcoin, I highly recommend you take a 1% position, whatever your liquid net worth is. So let's say it's $100, buy $1 worth of Bitcoin, and then just hold it. Like literally just hold it. Don't look at the market. Don't watch it. Don't do anything, because it's incredibly volatile. And normally the investment thesis behind Bitcoin is that it's uncorrelated, which it is, to the rest of the stock market and bond market and commodity markets. So it's a very nice portfolio asset. Again, I'm a big believer in diversification. And so Bitcoin gives me a lot of diversification, and even down 60 or 70%, it's diversifying some of my other risks. That said, many people don't really understand it. Many people think it's really risky. And I would say it is really risky, but that risk at least is symmetric to the downside and the upside. If it's down 70%, it can also be up 70%. And we've seen that time and time again. So personally, I'm a buyer of Bitcoin at these levels. And if you don't know how to do it, because again, you can't really just call like your broker and buy it necessarily, there is an exchange traded fund. So if you want to buy it via the stock market, it's called GBTC. I don't know, Global Bitcoin Total, I don't know, Company. GBTC, and that trades like a stock. It trades at a premium or a discount, like some open-ended or closed-ended mutual funds. in any event, it's not necessarily directly related to the price. It's based on supply and demand. So you might actually be able to buy GBTC at a discount to the inherent underlying Bitcoin asset that it holds. So that might be an interesting way to get like double dip. I haven't checked the premium or the discount, but you can do that easily. Just Google it. If you want to own it directly, for those of you that don't have any exposure to it, one of the easiest ways to get started is via Coinbase. And it's a pretty safe platform, but just make sure that your Bitcoin is safe and you know what it is that you're doing. But I would encourage you at these levels, like everybody should have a 1% position.
Do you subscribe to technical analysis when trading?
I don't subscribe to technical analysis when trading, but I actually look at it carefully. So there are no, how do I say this? I look at it because other people look at it and it can become a self-fulfilling prophecy. So I pay close attention to it. And I think that there's some like real, technical analysis charting. For those of you who don't know, there are people that buy and sell everything under the sun. Without knowing what it is that they're buying and selling, they're only looking at the price action. They're looking at the charts. And the reason that that becomes important is because that's really a visual representation of human psychology. So when you see things that are really, really like going straight up, like the stock market was in the fourth quarter and the first half of the first quarter of 2020, like I look at that and I say that's not sustainable. I film videos on YouTube. I warn you, I caution you. I personally have been selling into that rally. So as it turns out in this market dislocation, to be very direct with all of you, I've been my single largest asset, which was a home. I just closed like the day before the stock market started to crater. Thank goodness that it was actually closed, because I would have worried about the seller the buyer either walking away or renegotiating the price. But instead, the money's all sitting at an escrow person, and I'm actually here sitting in cash, shopping at these lower levels. And so as the market was rallying, I was selling into it. Then I actually sold everything. I'm sitting in cash. Now the market has come down significantly, and I'm actually looking to deploy assets. And there's a lot of smart people doing similar things. And actually, there's a lot of viewers just like you that have been emailing me and messaging me, telling me, thanking me for my advice and my caution and my preservation of capital mentality and my playing the long term. And they actually sold into the rally. Somebody wrote to me and told me that they sold 2 homes after the video that I shared that said, now's a good time to sell a home. If you don't love that location, you don't love that asset, it's not performing very well, now's a good time to sell. And somebody actually emailed me and said, I sold 2 homes and now I'm going to go redeploy that money at a lower level, potentially in a better location. And thank you. So, it's one thing to listen, and I really appreciate your attention. But what I really want to do is not take like the horse to water. I want the horse to drink the water.
Are we in an official bear market yet?
Yes, we are in a bear market. I don't know after today's rally, but we were down over 20% in all of the indices. And I think it's the fastest time that that's ever happened. I mean, it was like overnight. It was immediate. It was sudden. I think it was like 16 or 17 trading days, pretty much straight down with a couple of false rallies, which I said would happen in the last live event. I know the audio wasn't good, so maybe you missed it, but I said there's going to be some false rallies. I'm a better seller during these rallies than I am a buyer, but I'm not trying to encourage you to trade any of this. I'm asking you to think about it from a long-term perspective and dollar cost average into it.
What about insurance to protect oneself from a visitor getting the coronavirus? Thoughts on renting rooms in your house?
So if I was renting rooms in my house and I was concerned about people coming and staying that might have the coronavirus, one, I would be concerned where they were traveling from and where they had been in the past. And then 2, I would have, these Purell hand sanitizers everywhere. But I would just be super vigilant about not touching, not shaking their hands. I shared on the Facebook Live, like Eric and I are going out, we're meeting realtors, we're looking at all sorts of stuff. Every single person that we meet, we actually give them a elbow bump. I don't know what it's called, but that's the new handshake. So embrace it. And then we just are constantly washing our hands and using Purell, and we try not to touch our mouth and eyes and nose. I shared with you earlier, or maybe it was on the live, encouraging people to come over here, but like I myself have had a cough, and I'm rarely sick, but I'm a little bit sick. And Erica, being as sweet as she is, she thinks I'm like dying of the coronavirus, but I'm not. And either is anyone else. It also is the flu season, and the flu is about 10 times worse than the coronavirus today. So people will be sick, and it doesn't mean that they've got the coronavirus. What is my opinion? I'm going to read this question here. Go ahead.
V-shaped or U-shaped recovery?
I think it's going to be a V-shaped recovery, but probably postponed for a couple of weeks or months, depending on the fiscal stimulus. Somebody here saying that I was recommending Bitcoin under 8,000, and that's true. And again, I would encourage you to cost average in. If you bought some at 8,000, buy some at 7, buy some at 6, buy some at 5, buy some at 4. And then when it goes to 10, 20, 30, 50, you're thrilled, right?
I am in escrow for a short-term rental property out in Kingswood, California.
Okay.
Should I get out while I can and wait a few months to buy something else in a couple of months, worried about housing prices crashing?
So I wouldn't worry about housing prices crashing, especially if the fiscal stimulus package that I've been discussing really takes place. I do think that you have an opportunity right now, if you're an escrow, to perhaps renegotiate your contract. That said, they may not be willing to renegotiate. So you should figure out whether you really want to exit or you want to buy it, and then try and thread that needle and be in the right place. But I don't think that we're going to see a massive housing crash, primarily because interest rates are going down and mortgage rates have gone down significantly. There's been a bump up in the last few days due to the overwhelming demand for refinancing. But I think that at these record low levels of mortgage rates, it's very attractive. And if you have a long-term horizon, I think you're going to be fine.
Mike Maloney said,
and I'm sorry, just to underscore that, I'm buying more real estate today, and I wish I was buying it, during a stock market crash and a real estate housing crash and so on. But I'm involved in a 1031 exchange. There's 45 days for me to identify what my replacement assets are. And at these high levels of asset pricing, it just makes my job harder to find replacement assets. But Eric and I have been on tour looking at different opportunities, and we found some incredible opportunities even at these levels. And so, to be really clear and direct, I'm buying more real estate at these levels, whether right or wrong, than I've ever done before. And the reason that I'm doing it at this time right now is because I sold during a good period of time. I've been sitting in cash. I'm doing a 1031 exchange, which means I'm deferring my capital gains, which are significant. I've been deferring my capital gains since 2000. So I've got 20 years of gains, and I do not want to pay the taxes. And so if you think about it, when I spoke to my CPA, my tax hit would be greater than 50%. That's 50. So I could actually suffer a 50% drawdown in the real estate market before I'm back to what I would do if I just paid taxes. Doesn't make it right, just means that that's what I'm doing. I'm finding great opportunities. I'm buying more real estate than I ever have in the short-term rental market, new ideas, new opportunities, new experiences, bigger, better, and I'm super excited about it. So I'm very grateful.
Mike Maloney says the silver to gold ratio is in an all-time high, and it is to buy silver. I just bought a monster box of silver eagles. What are your thoughts on where precious metal will go?
So I'm not a precious metal guy. I've never owned any precious metal in my entire life. I've never owned any bonds either. So I'm not necessarily, when I ran a hedge fund, I owned everything, but it wasn't me personally. I was running $4 billion on behalf of institutions, insurance companies, banks, pension funds. Some of the smartest and wealthiest investors on the planet would turn to me to find opportunities that were not correlated to the rest of their portfolio and would generate equity-like, stock market-like returns with bond-like volatility, right? That's the holy grail. If you can find and create an investment portfolio that behaves like stocks in terms of price appreciation, but behaves like a bond in terms of steady income, that's incredible. So that's what I used to do. And in those portfolios, we traded everything under the sun, including things like water rights under the ground and electricity. And we just traded anything that we thought we had an edge on that was not correlated, that was accretive at the portfolio level. But from a personal perspective, I've never owned any commodities. I don't own any gold or silver. So I'm not the best person to ask about that, but I do find it very interesting. Even in this dislocation where people should be bidding up gold, gold was sold. Everything was sold because it was such a massive fear. Volatility, the VIX index reached a second time all-time high in the high 60s or low 70s. And so everything was being discarded, raising cash. And literally, I went to my bank today. I had some checks to deposit, and I was told by the bank that they've had requests for people that were asking for tens of thousands of dollars and even hundreds of thousands of dollars in cash to be withdrawn because they were so panicked and scared that they wanted to have just like whatever, $100,000 or $400,000 in cash in their safe at home. And, that's just unnecessary in my opinion. Peter, could you? Thank you. I'll read some questions here. What's my opinion on Airbnb's latest news? Introducing guests, choose their crowded hotel partners and avoid private home stays. Shafiq, I'm not sure I understand your question. How do you get the credit on Airbnb of future bookings if they cancel on the Airbnb site? Is that possible? Charles, so basically what I'm doing is I'm trying to keep the money that's already been sent to me in the case of VRBO, because that gets paid in advance. And on Airbnb, we're just changing the dates. And I'm also telling them, be sure you tell everybody that the dates that they select in the future might have a different price point, right? So like I'm not exchanging spring dates for peak summer dates at the same price. So if my spring dates, thank you very much. And pardon me 1 second, friends. Like I said, even this guy, even this guy gets the common cold. So just be sure that you tell people up front and be transparent with them that like, yeah, you'll be happy to hold their the money that they've already paid and apply it to a future date. But those dates, those prices may change. And if you're using dynamic pricing and they push forward enough, there's a really good chance that you will actually make up some of those losses that you're foregoing. So don't think of this as money like that you've lost. It's quite possibly just deferred income, and in the future could actually be worth more. But you have to be smart enough, conservative enough, have reserves enough, be playing the long game, and thinking forward that you're not like forced to close, forced to shut your business. Like the people that are really getting hurt, the larger rental arbitrageur companies like Lyric and Sonder that are announcing hundreds of layoffs, thousands of layoffs, closing down entire business lines. Like they just thought that the party was going to continue going. And I've filmed videos talking about how the VCs that are funding all that, looking for the next unicorn, are really just going about it all wrong. I think that the way to play the short-term rental market is from a real estate ownership equity perspective. If you've got one or two rental arb companies, one or two rental arb short-term rentals in your portfolio just to juice the returns, that's fine. That's like trading on margin. But I discourage people to go out there and over-lever themselves and take on way more liability in terms of leases that they can't afford to hold for, say, 6 months with zero revenue and pay all the utilities and all the leases. That's a surefire way to go bankrupt. And the last thing I want for any of you is to have that on your credit report, that pain, that suffering, that loss. So please just don't do it. And I've been consistent with that from day one. I've never strayed from that, and I don't think I ever will. We have another question.
I've lost about 6 cancellations in 2 days. Beach locations are dead. My entire calendar is empty for future. I'm stressed. I'll make it because I always do. I'm a nurse and writing this out.
Okay, so who's that?
This is Jenny Tilley.
Jenny, speaking to you directly. So you're a nurse. That's a wonderful thing. I'm sure you're helping everybody with the coronavirus at this time, and I just want to commend you and thank you for that. We need more people like you, so thank you. And also a shout out to Andy Chu, who could not be on this live, but he messaged me and told me that he was going to be helping people with the coronavirus. And so the people that are out there on the front lines fighting this, risking themselves, I just want to give a shout out. So Jenny, thank you to you as well. You will survive. I encourage you to just lower your rates, take what you can, and you will get bookings, and they will probably come back earlier than you think, but just at a lower rate. So these are different times, and just like stocks are trading at different levels, so too should your average nightly rate. Just decrease the rate. Adam Wyndham, who's one of our sponsors from Host Financial, I see a comment here that everyone is feeling the market and seeking stability and chasing yield in real estate. And that's probably true. I mean, I think that real estate is a much safer investment. That's why it's called real estate. It's like actually real. And Adam is helping me finance some of the properties that I'm buying. And I just want to be thankful for Adam, not only for supporting Short-Term Rental University and hosts like you. He's worked with dozens of people from this channel and will continue to do so. So thank you.
And maybe a suggestion for Jenny would be
Well, you come here. Listen, Erica has a suggestion, but you wanted me to say it. You say it.
Jenny, if you can reach out to traveling nurses, if there's anybody that's going to be traveling to where you're working, basically there's people that are coming to help out, maybe you can use that as a network.
Yeah, and I think it's really important, Jenny, that you think about it this way. And I've said it before, but I know people are joining this live stream at various times. So if you missed it, it's important that you recognize this. This is not travel cancellations. This is deferred travel. Everybody who's been canceled, like work.
So there's a lot of people that are asking how to do that, how to defer, like how to not refund them,
Okay.
but to postpone.
Okay. So my understanding, and to be really direct, I don't actually do all of this personally, right? So like my team does all of this, but what we are doing is we are changing the dates, or we're just keeping their money and asking them to like book when they have time. So if they're booking on HomeAway or VRBO, I believe that we get the cash in advance of their arrival when they book. And so we have that, and then we can just give them that credit. So if they sent $1,000, we give them $1,000 credit for when they book in the future, in 3 months, in a year, whatever it is. I would encourage you to put a time period on it. And I think many of these people actually will come and visit you and stay with you, and some won't. It's kind of like when people sell a gift card. The gift card business is an incredibly lucrative business because you can't believe the percentage of people that don't actually use gift cards. So you collect $100 at the time of sale, and then some percentage of the people don't actually use it. That may happen here as well. On Airbnb, I don't know that I've had any cancellations. My 2 have been on VRBO, but if they haven't transferred the money, then work with them to reschedule a future date, and they haven't transferred any money. They're just booking in the future. What else?
Let's see. I have a home for sale. Should I hold off?
If you have a home for sale, you should not hold off. You should continue to sell. This is my point. Like, we shouldn't really be altering our long-term strategic planning, our long-term initiatives based on a short-term event, right? This is a knee-jerk reaction. It's a moment in time. I know it's scary as heck, but this too will pass. And so we have to stay level-headed. We have to stay calm. We have to have stability. And this, again, I'm going to encourage everybody here to be a leader, right? Like, lead your children, lead your family, lead your church, lead your tribe, lead your guests, lead everybody. Just remain calm and sane. And if I can help you guys through this period, that's what I'm here to do. And I'm here to serve you. And I really appreciate your time and energy. And I'm just here to share with you, like, the best is yet to come. This isn't like the Black Plague where we're just all going to pass. This is nothing like that. Although the media may make it seem like that, and it's going to get scarier, right? I said that earlier. The headlines are going to be much worse than they are right now. The number of cases in the United States right now is a joke. It's way underreported. And the reason it's way underreported is because we haven't even started testing. And that's a mistake. In the future, the next time a virus hits, and notice I said the next time, because there will be another time. The next time the virus hits, we will finally be better prepared. I'll share with you a little bit of trading history. Back in the day when I ran that $4 billion hedge fund, we would always be surprised at some event. And what some really smart people did was they created redundancy. So like, if you were worried about your building being inaccessible, like, I can't get into my building, so we can't trade. What some really wealthy and successful hedge fund people, the first person I ever saw do this was Paul Tudor Jones. He's a legend. He actually purchased a whole second facility a couple of miles down the road from where his first facility was, and they would just have a backup, a redundant plan. And every so often he would walk into his office and say, guys, pretend there's a fire, we're all evacuating, and we're going down, whatever it was, 3 miles down the road, and we're going to trade in the backup facility. So that was like the start of a trend where people started to have redundancy. We saw people not being able to get into their building, so we created a plan that was redundant. And then what we started to realize was, down the street, a mile or two isn't far enough, because there could be something that affected the entire region or the entire zip code. And so people started to do it across the country. They'd have a trading desk in New York and a trading desk in California. And if something happened to New York, you could just go to California. And then we started to see people take it, to different continents. They would have a backup plan in Europe, and so on and so forth. And no matter what happens, there's new things that you learn. Like when we had a brownout in the entire East Coast, anybody who had a redundant plan on the East Coast realized I need a place on the West Coast. And so we're constantly learning and improving. We're solving the past problems, but not necessarily thinking about the future opportunity set. And I want to encourage you all to think about the future. So as we think about our short-term rental business, and this is the way that I'm thinking about my short-term rental business, if I have a lot of hurricane risk, then I want to add some earthquake risk. If I have a lot of earthquake risk, then I want to add some wildfire risk. And like I'm looking to add risk into the portfolio that diversifies my risk. If I have a lot of urban, then I want to add vacation. If I have a lot of vacation, then I want to add urban. And you're constantly looking to diversify your portfolio so no one black swan event can take you out, right? And I've been teaching it that way forever because that's the right way. That's the correct way that institutional money managers, professional money managers, that's how we survive, because we can't foresee every black swan event. We're not like, mad magicians. We just know that diversification is critically important during times like this. And by way of example, and I don't know if anybody's here hosting in Austin, but let's say you had a really huge business in Austin, 10 units, 100 units. And South by Southwest is where you make a significant sum of your money because there's so much demand and your prices surge. And so like that one event is critically important to your annual success. Well, when that one event gets like postponed or delayed or canceled, you have to have enough reserves. Like you should realize that that's a massive risk. It's a massive benefit, but it's a massive risk. You have too much concentration in one city and one event. And so you should have enough reserves so that if that event gets canceled or postponed, you're fine. And if you didn't realize that that was a massive benefit, but also a risk, now you do. And you won't do it the same way again going forward.
So I do have an update. Would you like that?
Mm-hmm.
The bill is expected to provide Social Security Administration funding for workers who don't currently receive sick pay and need to stay home because they have the disease or need to care for someone who does. People will be eligible to receive benefits amounting to 2/3 of their monthly earnings, up to $4,000 for up to 3 months.
Okay. And I'm sure there will be more, but basically it sounds like what the Trump administration is working with in the stimulus package is reducing things like payroll taxes. Erica did not say that, but I think that hiatus has been already previously announced. They're deferring tax payments due on April 15th. And now there's Social Security benefits for people that need help during this time of need. And what I'm going to suggest is that they will do everything in their power. They'll throw everything at fiscal stimulus and monetary policy to make sure that the people that need help the most get it. And that will actually get us out of this like recession that I'm predicting faster, sooner, and we will resume our ordinary life with blazing speed, because nothing is going to get people more excited to go and travel and do these things than being like socially distanced, canceled everything, have no fun, miss birthdays, miss graduations, miss holidays and events. And as soon as it's like coast is clear, people are going to really be gunning for it. And for better or for worse, I think there's going to be more demand than there is supply. Again, supply has gone down as some of these big rental arbitrageurs have gone out of business. Supply is down, higher demand, prices go up.
In the process of buying a 9-unit building in a zonage where short-term rentals is allowed. My plan was to convert the entire building. Worried and looking to renegotiate the price. Suggestions?
Look, during these periods of dislocation is a great opportunity to renegotiate your price. I just want to suggest to you, though, that there's a risk, right? Like the seller might say no, or the seller might cancel the contract, or, like you have to just be cautious and be true to yourself. If you feel uncomfortable with the purchase, then exit. But make sure that you feel uncomfortable with the purchase on a long-term basis and not during a crisis, right? Like this will pass. So is the opportunity, all the due diligence that you've done, all the work that you've done, you've identified it. Has that changed? Probably not. Now, maybe the price has changed. Maybe you're not willing to pay $200,000 per key. You'd like to negotiate it down to $175,000. The seller is likely in a place where they need the money more today than they needed yesterday. And when people need money more today, they will likely lower the price. Not in every instance. Real estate's a very local and hyper local market. And so, for instance, we've been having a bull market for years in real estate, except in high-end New York City prices. There's too much inventory. So it's supply and demand. You have to know what it is that you're looking at. And I'm not able to give you a blanket statement. All I'm saying is this, and this is for certain. People are more negotiable during times of stress than during periods of calm. So this is an interesting time to use your negotiating skills to get what it is that you want. But I caution you not to push too much because people aren't necessarily desperate and you might lose a deal that you really want by pushing too hard.
Is there anything you would add to your STR listing that addresses the coronavirus for potential guests? Add a text image with some sort of acknowledgement.
Yeah, so the question is there things that you can do to make your short-term rental more attractive to somebody who's looking to stay? And yeah, I would highlight like what you do in the cleaning process, right? Like we scrub with internet connection is unstable. We scrub, sorry about that. We scrub all of our, between guests, we scrub with Lysol that kills 99.9% of the airborne and whatever. Like whatever it is that you do to take advantage of not to take advantage, to eradicate the virus, highlight that. That might help somebody take more comfort in your place. You'll probably be the only place in your zip code that's doing that in your listing versus everyone else that doesn't say anything. So if you're doing things that are special, like you've got Purell out, you're using Lysol, you're cleaning and disinfecting, you're increasing your cleaning staff, whatever it is that you're doing, highlight it. People are really concerned, hypersensitive. That might be the reason people book your place versus someone else's, just that mention alone. So I would definitely consider doing that, sure. And I just want to share with people, we've got about 15 more minutes before Eric and I have to go. We are actually going to look at something that's super exciting, potentially to buy for the short-term rental space. And what I would call it is a unique opportunity, a unique experience, consistent with everything that I've taught for years. I'm not saying that it's going to happen. I'm just saying that we have an appointment to go check it out. And that's part of the real estate game, right? It's like, we're going to go kick the tires on 10 different opportunities for every one that we end up buying. But we've got opportunities. The reason we're here in California is we're looking at these things. And so I just want to share with people in 15 minutes, no matter where it is that we are, we have a appointment this afternoon and we're really excited about it. And if it works, you guys are going to be excited too. You're going to learn an awful lot. It's going to be amazing. So therein, by leading by example, we didn't cancel the appointment. We didn't say we're not buying anything. We didn't say, like, I'm really worried about travel. We're really worried about hospitality. We're staying consistent with our investment thesis and opportunity. And I continue to believe that the short-term rental market, even with this little hiccup, remains the most attractive investment you can make in the real estate space today. And I think it might even be more attractive in the future as more people say, I would rather have more localized experiences, smaller experiences, more hospitable experiences versus some of these larger mega resorts. You have another question? What? She's excited.
So, first of all, I want to say that there's absolutely, we've been inundated with questions, and unfortunately, we just don't have the opportunity to go through each and every one. So actually, I've been working with Hardick, and I think, during this time, people need help and they need handholding and they need advice. And I don't think there's anyone more qualified. And so just so you're aware, we have opened up 10 different, 10 hours in the calendar, so that you can schedule one-on-one with Richard. Because I just want to say, like, my heart goes out to everyone that is hurting and scared and stressed, and not, I'm just sending you so much. I'm sending so much love, and I am so grateful that I'm so grateful for your brilliance. And so we want to help, the people that we can. So, so like I said, we have created 10 different one-on-one opportunities.
What I would say is this.
Yeah.
When the team asked me, because again, we've got so many people that have so many questions and like real specific questions that you can't ask here.
Right.
I owe this on my mortgage. This is how much I've made, or I have this much in the stock market, or whatever. Like, I'm not a wealth manager. I don't really want to be a financial advisor or anything like that. But we've had so many people reach out to us and say, you know, could you please help me? Could you please help me? And I want to help as many people as possible. But at the same time, I've never been busier between the Outer Banks project, which is going full speed and going incredibly well. We're opening that relatively soon. All of the assets that we're currently buying and creating this brand and this opportunity set. We're going down to Costa Rica and looking at some opportunities. So we're just all over the place. But the team came to me and said, Richard, people really need your help right now. People need specific questions, not like general questions that we can answer on YouTube. So if that sounds like something that you're interested in, what is the link that they should click on?
str.university/book.
Okay, str.university/book, like as if you were booking. We only have 10 slots because even to be perfectly honest, to get 10 hours was hard. We're on airplanes, we're traveling, we've got all sorts of appointments. I have a 10:31 deadline, and I'm not, trying to make this a business or anything like that. But if you need help, it's a small price to pay. I guarantee, I think we have a guarantee, right? Money back guarantee. If you don't get your money's worth, we'll give you your money back. But there's only 10 because I just don't have any more time. I apologize if there's more demand, nothing personal, but I've got a lot of really important things, and I just have to free up as much time as I can to help as many people as I can. That's why we've done this YouTube live 3 times. No pressure. If you've gotten everything you need, then that's great. But if you have some very specific questions about your portfolio, your booking, an opportunity that you're buying or selling, and you need your hand held, and you want my opinion and my advice, I'd be happy to do so. So str.university/book.
So Eric.
Eric.
Do you have any opinions on alternative investments besides real estate, Bitcoin, or stocks?
Wow. Eric wants to know about alternative investments other than Bitcoin, stocks, and what was the other one? Real estate. I'm always looking for unique, difficult to understand opportunities where the average person either doesn't find the opportunity. And then even if they find the opportunity, they can't quite analyze it, or they don't see the future. And that's really what I did in my prior life. And I think that the point is there isn't one alternative investment that makes everything better. You need a variety of alternative investments. I shared earlier that I had invested in companies that had like water rights, aquifer rights. I invested in alternate energy years ago, decades ago. Both in terms of solar and wind farms in Germany and things like that. But I couldn't do just the wind farms in Germany because that's too concentrated. So I had to spread my risk across a variety of different things. And that's why I've been sharing with all of you about your short-term rentals, making sure that there's diversification, because if you were diversified right now, the pain that you're feeling is lessened through that diversification. The fear, the concern, the loss of income is less through the diversification. If you're highly concentrated, then it's binary, right? Like either the Coachella got canceled or it didn't. South by Southwest canceled or it didn't. And like, you don't want to live and die by the sword, right? You want to have room to live for another day. And although I can't see it, I really want people, we're not on Facebook Live, just like it in YouTube so that people understand that this is something that's really worth listening to. Please go ahead and like the YouTube video, encouraging YouTube to promote this video to other hosts and entrepreneurs like you so that they get the benefit of this understanding about how to create a proper portfolio, the importance of diversification, the importance of using modest leverage, right? I've filmed tons of videos saying that zero mortgage isn't the right number, but being over levered isn't the right number either. It's a very personal thing. And if you listen to all of these things over the time, and you understand that I'm not like here promoting or selling or doing anything else, I'm here to help you. I ran a $4 billion hedge fund. I don't know of any other portfolio manager that ran a $4 billion hedge fund that's letting all of their knowledge and secrets and sharing it with people just to help. So, understand that I'm doing this with your best interest in heart. It has nothing to do with me or my ego or anything like that. It really is to see successful entrepreneurs become successful hosts, successful hosts become successful entrepreneurs, and to change lives. I want nothing but the best for you and your family and help you create a legacy. And the best way you can do that is by spreading your risky bets across a variety of different sectors, asset classes, locations, geographies. And now that we've had the risk, I think it all makes sense, right? Everyone's like, oh, I get it now. But when things are going smooth, that's when you need to make the changes, not now. Now's not the time to react. The time to create the intelligent portfolio was earlier. There'll be another time to do it again. And as long as you continue to follow the channel and listen, and by the way, I understand a lot of the feedback that we get, and we encourage feedback, is people don't seem to understand what it is that I'm saying. Perhaps it's esoteric, or perhaps it's more advanced in terms of finance or real estate investing. But a funny thing happens. The more you listen, the more it makes sense. And then you actually internalize it, and then it becomes inherent. And then not only do you understand it, you can actually act on it. So if you don't follow everything that I'm saying, that's cool. Lots of people haven't. In fact, this lovely lady over here didn't understand any of this stuff earlier, and now like she's finding great opportunities, finding great things, has a whole opinion. I mean, maybe I've created a monster, I don't know. But my point is, if you're not following all this, it doesn't make a lot of sense. That's cool. Don't give up. Just continue to listen. What else? Another question? Thanks, Richard. You are a credit to the establishment. Thank you both. I'm so happy I was introduced to your channel where you're providing such great information. It's my pleasure. Thank you, Richard, for sharing all your knowledge. Save me, Jesus. Oh my God, are we all going to die? Come on, Mr. Roboto. That's silly. We love you. You made me cheer up. Oh, that's so amazing. Erica, you and Richard have been so helpful. Thank you. There it is. STR book. Thanks for your time today. What is your rate for one-on-one sessions? Click on the link in the book and you'll see everything that's there. Andrew, how are you? That's my man. I wish I was 30 years younger. My cancellations have been in time for the person to get a full refund, so no opportunity. You know, that's one of the things, by the way, I've been teaching time and time again about strict cancellations. So if you've been doing your own thing using flexible or whatever the other easy cancellations, it's fine in a normal environment, but how do you feel about that like flexible cancellation policy right now? And I know Airbnb has changed the policy and so on and so forth, but I'm just saying, you know, like, I don't mean to toot my own horn or say that I was right or this or that or the other. I'm just saying, as you learn and you start to question who your instructors are and your professors are, you need to start to gauge like who is right and who is wrong and who's looking out for you and who's cautioning you and who's being aggressive, and just start to formulate your own like knowledge about who do I want to listen to and who do I want to emulate and who do I want to be like, and what does my portfolio look like when I'm done building this out, and who's going to help me get there. It's really important because, you know, YouTube is a wonderful thing, Instagram's a wonderful thing, Facebook's a wonderful thing, but there's an incredible amount of people that have no knowledge about any of this stuff that are just like been successful at one moment in time telling you how to do it. And if you're following that, you're taking a lot of risk. So, you know, I've been teaching about the strict cancellation policy, and I've said time and time again, all of my places have strict cancellation policy. And just to remind you, I don't have a strict cancellation policy because I want to be like a jerk. I have a strict cancellation policy because as a short-term rental entrepreneur, it's very binary. I don't have 100 rooms in a hotel that if one person cancels, the other 99 are filled. If I have one house in one location, it's binary. Either it's occupied or it's vacant. So if somebody were to cancel a week or 2 weeks in advance, the likelihood of me rebooking that isn't as great. So I have a strict cancellation policy, and now it's proving to be helpful through this entire period. If you had a flexible cancellation policy, I'm not sure that you're getting paid what you think you might be getting paid by getting more bookings due to flexibility, but you'd have to calculate that yourself versus all of these cancellations that are getting all their money back right now, right? Like, you can't plan your portfolio when times are good. You should be building your portfolio planning for when times are bad. And then when times are good, it's a really happy surprise. You're like, oh my gosh, this is wonderful. But when times are bad, you're like, this is the base case. So it's really important that you think about your entire business: cancellations, location, diversification. How much money do you have saved? Can you survive a storm like this? And that's all it is. It's a storm, right? It will pass, but you have to make it to the other side or else you get taken out.
You're getting kicked out in 2 minutes.
Are we? Okay. So what time is it? 5:20?
Mhm.
All right, friends, I think this has been really enjoyable for Erica and I. We're being kicked out. You know, I had a certain amount of money to rent this place and we're done. And I'm just teasing, kidding. But I want to thank Erica for locating this place. I hope the audio and the video were good. We've got the backup, so even if it wasn't, we've got great audio to replay this. Again, if any of you want individual one-on-one consultation about any situation, whether it's in your short-term rental portfolio or your stock portfolio or how you're thinking about building a portfolio, anything like that, we've got 10 hours reserved in the next, I think it's week or two. And just go to str.university/book. I think Hardik put the link on YouTube and on the Zoom webinar. Yeah, thank you, Hardik. Thank you, Charles. Thank you, Erica. Thank you. Where are we? The Hive. I'm just confident that the best is yet to come. Watch, just watch. And again, if you think that I don't know, a lot about what's going on, just go check out my predictions from the video not 6 weeks ago and just see. I said Airbnb wouldn't go public due to the stock market rolling over, and boom, Airbnb's on delay because of the stock market rolled over. I said the stock market valuations were at all-time unsustainable levels, and there would be we'd roll over. That's happened. I said that there would be things that would affect travel, whether we didn't know what they were, and boom, the coronavirus has happened and travel's affected. And now hosts that have been listening to me and raising cash and selling stocks and selling assets that weren't performing are in a much better place. And that gives me such peace and comfort and joy that I'm helping people. I just, I'm grateful for your time and your attention. And I just want to open up the opportunity. If some of you want individual handholding, you want to get really granular, I'd be happy to do that. No pressure. Believe you me, I can find things to do with my 10 hours. But I just would love to help anybody that needs help. And thank you for your attention and your time. Have a wonderful weekend. The best is yet to come. If you take anything from this, just remember this. It's not cancellations, it's deferred. Watch. There's going to be so much pent-up demand that you might make more money back in the end than you lost right now. It's a moment in time, but you got to live for another day. So thank you, thank you, thank you. Appreciate it. Please like the video and have a great weekend. Stay safe. Purell, friends, and wash your hands. Elbow bump. The best is yet to come. Thank you.
Bye.